Hi, my name is John Stevenson. Welcome to the show. Today, we're going to be answering the question about how much does a $450,000 annuity pay out? So whether you have more or less than this, we're going to focus solely on $450,000 because a lot of you do put that amount into annuity contracts to get a little bit more income than maybe the smaller premiums. But maybe you're not looking to put more than that or much more than that into annuities, and you're just thinking, what would this pay me? And so we're going to explore that together. So if you want to see, though, what annuities will pay you, go to my website, johnstevenson.com, and you will see my annuity calculators right there. Okay, if you go to the income rider, that will give you the most annual income, lifetime income, whether it be single or joint. If you're looking for just a fixed rate growth like a MYGA, very similar to a CD, then look at the MYGA rates. They're very good right now. And then if you're just thinking, hey, I want a SPIA or a DIA or a QLAC, those are the classic irrevocable annuity contracts where you give the insurance company the money. You do not see it again, but you will see the income. And then they got different options as far as period certains and COLA increases as well. So, all right, so let's dive in. If you see my screen, you will notice that I've got a couple who is married. And again, the payout will be higher if you're single, but a lot of you are married who reach out to me. And so I'm just going to show this for a married couple. They're both 60 years old. If one of them is younger, then this will affect the annuity payout because the insurance company is on the hook for a longer period of time. So, but based off of $450,000, if we were to take it immediate, okay, and we'll look at different options, not just immediate, but if we took immediate payout, Prudential will be the highest for life. Okay. And we're looking at an income rider right now. Income riders, again, they are paying the most in annual amounts. Okay. So you see, all right, well, $29,453, that's not bad. I'm getting that lifetime income for the rest of my life and my spouse's life. What does that look like over, my time horizon? Maybe I'm thinking I'll live till 95. Let's see here. Basically, $1,060,000 by the time I'm 95. If I live longer or my wife lives longer, then we're going to just take out income longer. So that's what's nice about these. They are lifetime income products. Now, it does not keep your balance intact. So you'll see the balance going down over time because you got the annual income. Now, your balance is earning interest, so that's affecting it. It does affect it in a positive way, but you also have the rider charge over here. You see that rider charge? And that's what's providing you that lifetime income. That rider charge is being charged to the account value. Okay, that only affects the account value, not the income. That income is a net benefit to you. Okay, you'll notice that the death benefit here goes down at the same time as the account value does. So if something happens to you and your spouse, before using it up, it goes to your beneficiaries. Okay, this is very similar to a refund option with a SPIA or a DIA contract as well. Okay, and I guess, of course, MYGAs, they will absolutely pay out what's in the account if something happens to you as well. Okay, so if we look at that and say, okay, well, that's pretty good. I mean, that's lifetime income, and if we live till our mid-90s, that's pretty good payout, and it's guaranteed. It's just you're basically buying a pension. Okay, and this is giving you this guaranteed income for the rest of your life. You just don't have to worry about this part of your portfolio. This is your pension part. Okay, the rest of it might be growth. If you got it in the stock market, or maybe you have it in some growth products, such as just some fixed index annuities or MYGA contracts. Those are great annuities for growth, and you can use them for income too, but they're not guaranteed lifetime income products. So there is a difference. So let's take a look. Let me just look at a single payout real quick. What if it's just me? Let's say I'm just married. I'm not married, or I got divorced, okay, and I want a single payout, okay? I'm going to get a little bit more, okay? Not a lot more, but, it looks like about $2,000 more. So it's just because they're on the hook for a male. Us guys, we don't live as long, but they are also on the hook for only one life instead of two, okay? So that does make a difference. All right, so let me go back to joint here. I just wanted you to see there is a difference between single and joint. Okay, so if we were to say, well, I'm going to take income at 62 because that's when I'm going to start my Social Security. I want to have that guaranteed growth during that time. Then we're going to see different companies. So Clear Spring, Corebridge, definitely higher. Delaware, F&G, Prudential's still up there, but they're not the highest payout at that point. Okay, they're still not bad. So if you were thinking, I'm going to buy this Prudential product and I'm going to take income now, and then you change your mind and say, well, actually, I'm going to wait, they're still not bad. So it still might be a great option for you. But if you're thinking, I'm going to wait at least 2 years, then you can see Clear Spring, the payout's a lot better, $35,000. Okay, so let's say you're thinking, well, I want to wait till I'm 65. Maybe you want to take Social Security at that age and you're thinking, I would like to delay taking, I'm going to take Medicare at that age, delay taking Social Security, and I wanted to delay taking income from an annuity contract. How much can I get? $46,856. Nationwide peak is the highest one for this couple. Well, that's pretty good. So if we go in here and say, all right, well, how does that work? How does that give me that amount from $450,000? Well, what they're doing is, because you let it sit there for 5 years, you have a guaranteed ending benefit base of $787,500 multiplied by 5.95, giving you the $46,856 for the rest of your life. Pretty good. Okay, if we go down here and say, well, how is that growing like that? Well, this particular Nationwide product, they're giving you a % simple roll-up rate after a 25% income-based bonus. That's really important. Okay, so when you go up and you say, all right, well, this guaranteed growth, yes, this is absolute guarantee. When you see hypothetical values is this right here. Okay, the interest that you'll earn from the S&P. They don't know what the S&P is going to do, so they're showing you, hypothetically speaking, your account value will last until you're 75, 76, and then it's gone. Your income, though, is forever. And if you take that out to your 95, it's $1.5 million. Take out more, if you live longer, then you take out more. That's why you see on the guaranteed side, you see guaranteed values. The only difference is they're showing you what if there's a long recession. Okay, then it just shows, well, your account balance doesn't last as long, but your income is still there. And you'll notice the benefit base still grows guaranteed. You still get that 25% bonus. You still get the 8% simple interest, and that's slapped on every single year. And so you can see at the end of 5 years, if you let it sit that long, you got $787,000 guaranteed. Okay, that's really, really important when you look at these contracts. Okay, look at the guarantees. Don't look at the hypotheticals. Okay, when you're looking for income, that's what matters. Okay, so I'm going to go back here and say, well, I'm going to wait till 67 just because I'm going to start Social Security at 67. I want my full payout. All right. So $54,000. ClearSpring is a clear winner here. Nationwide is still up there, but they're not as competitive, at least in this time range. So when we meet, if you're looking at purchasing an annuity, then you'll book a call with me. There's a link below this video, and we can chat about all your questions. I'm not going to try to hard sell you anything, but I will answer your questions. Otherwise, you can go to my website, johnstevenson.com, and you can look at the rates and play with my calculators. And then if you want to book a call there, you can. Okay, so ClearSpring is definitely the clear winner here, and so is Delaware, and so is Corebridge. So Nationwide is still there, but just not as high. So then we'll say, well, what if I wait till 70? What does that look like? All right, so ClearSpring is still the highest, $71,873, followed by Delaware, American Equity. So if you're thinking, I like the highest payout, then ClearSpring is definitely the winner. You got Midland starting to creep up here. Nationwide's still at the top there as far as A+ ratings, but you don't have to do A+ rating. I mean, it's always recommended to do as highest of rating as possible, but I have lots of people that buy ClearSpring all the time. Okay, they're a good company. And the A- just means they don't have as much reserve as Nationwide or Midland does. The reserve to liability ratio is a little bit different. So, but it's not a huge difference, but it is there. So if you're looking, hey, I'd like to have an A+ rating no matter what, then maybe consider Nationwide or Midland. Okay, but ClearSpring is really, really competitive. So if I was thinking I'm going to take income, let's say, let me just go back up here. So defer for 10 years. So we already know they're the highest for the last few years. So I might think, I'm going to take it like between 6 and 10 years. Then ClearSpring is definitely better. So they're definitely the highest during those years. They beat everyone out. So you can look at that and say, okay, well, if I take it at 70, it's this amount. If it's 69 years old, it's going to be this. 68 is this, 67 is this, and so on. So that's kind of how you figure that out. And also you can see the benefit base here. Remember that guaranteed growth rate of 8%? That's happening right here. That's why if you let that sit for 10 years, you got a guaranteed $1,049,000 multiplied by 6.85. That's how that works. So really important when you're looking at guarantees to look at the guarantees. Don't worry about the hypotheticals. If you're looking for like hypothetical growth and you want market protection, don't get the income rider, okay? Get a fixed index annuity like with Delaware or with Lincoln, okay? That would probably be what I would recommend if you want the most of the S&P 500 and you still want growth, but you don't want an income rider. You just want some guaranteed growth, and then you might strip off the interest over time. Maybe you let it grow for 5 to 10 years. You might sit there and take income that way. You can do that. It's just not a guaranteed contractual income for life like this is, okay? So let's go back here, and I want to show you one more thing. Let's go to the MYGAs. So MYGAs are fixed rate annuities. These are like CDs. They just pay a straight rate, and they're very simple. So sometimes people just want to park their money. They're not looking for lifetime income, but they would like to see what $450,000 would pay them for that. Okay. So we'll look at all the top ones, and there's hundreds of these. Again, go to my website and look at the MYGA calculator, and you will see there's hundreds of these in each of these terms. Okay. So typically, if you're looking for highest rates, look at the 5, 7, or 10-year terms. Okay, those are typically paying out the highest. So right now, I'm just showing you the top 3 out of all of these companies. So if I look at the 5-year, you see Nighthead paying out 5.75. Okay, if you look at the 7-year, Nighthead again is winning. And then if you look at the 10-year, Royal Neighbors is the highest, followed by Exonic. So, and there's different variations of the same companies. And when we meet, we can look at hundreds of these if you want to. But if you're looking for highest payouts, we'll look at those. And if you're looking to also take income, take off the interest, strip off the interest, maybe even some of the principal, then we'll look at like interest-only options or at least 10% free withdrawals. Those are the kind of things you look at for those. But you just have to realize those are just guaranteed for a term, and then you have to roll them over into something else. And they're not going to grow the same way. Like if I do one of these, let's say Exonic for 10 years. Okay, let's just show you an example here. The guaranteed ending value is $768,000. That's if you don't touch it. Okay, that's $450,000 growing to $768,000. That's pretty good. Now you might be thinking, well, I'm just going to take that at the end of 10 years and then I'll turn it into lifetime income. Can I get more than that? I mean, I can just get more that way by throwing it in there. Yes, you can absolutely do that. Yes, you can absolutely turn it into lifetime income, but it's going to be $768,000. That concerns me because when you go back here, you can see the same $450,000 invested with ClearSpring. And since your goal is lifetime income, this is a better option because $1,049,000, that's the guaranteed benefit value. Okay, that's multiplied by 6.85. Wouldn't you rather have that multiplied by 6.85 versus 768? That's the difference. So you just have to think about this when you're setting up your retirement and you're thinking about using your money for growth or for income. You have to set it up correctly from the beginning. If your sole purpose is lifetime income, make sure you set it up for that purpose. Otherwise, if you're just parking your money and then plan on using it for lifetime income, the MYGA probably is not the best option. So anyways, things to think about. But if you have questions, make sure you comment below. I'd be happy to answer them. If you want to buy an annuity and you're thinking that you'd like to work with someone like me who is transparent, who will show you everything regardless of his commissions, then book a call. There is a link below this video. It goes directly to my calendar and we will get on a Zoom call and I can answer your questions. Otherwise, you can go to my website, johnstevenson.com, check out the calculators and book a call right there as well. So I really am happy to help. And if you are looking for a financial fiduciary who is going to put your best interests first, then I highly recommend it. So anyways, I really appreciate you watching. If you do like the video, make sure you like, subscribe, share. And if you got comments, again, please put them below. I'd be happy to help. I really do appreciate you watching, and I look forward to seeing you soon.